Hey, everybody. Good evening. I'm a couple minutes early, but I'll give us some time for everyone to get in. Just make sure everybody can get in here. Once you're live, your stream is public, you'll find it at the top. Okay, I was making sure that Instagram is also running live to make sure that we got what we got going here. Want to make sure that it's live, and I'm not sure if it is yet or not. Let me go see. What are we? Are we on? Are we on? Hey, everybody. Hey. Y'all come on in. Come on in here. I don't know if Instagram is live or not at this point, but let's see. If it says you are live, I am live. I'm live on Instagram and I'm live on YouTube, and I should be live on Facebook. Let's make sure that we're where we need to be in all the places. Yes, we are live there on Facebook, and we want to make sure that we're live on Instagram. At this point, it's still not looking like it. It says I'm live, but let's see if I need to edit. I may need to edit it. Let's put a new stream key in here today at 5. Yep, we're ready. We're ready to go. Good morning. Hey, Adrian. Good morning. I always do that. I always say good morning, even though it could be evening. But if you say good morning all day, you don't have to worry about messing up the time. Just we go. It's good morning. It's all right. Good morning. Good evening. Either way is fine. I feel like I'm shining. I'm shining. My face is. I've got the glow of the Lord on me this afternoon. It is New Year's Eve at 5 o'clock. New Year's Eve at 5. Today we're going to one look real quick at last year. I mean, it's going to be quick. Look at last year. We're going to look at what meetings we have coming up this week. We're going to check out what earnings we have. Only a few of them are this coming week. And then we're going to talk about a plan that I'm going to share with you called Let's Go Left for 2024. Let's Go Left for 2024. And left is an acronym, LEFT. Let's Go Left. I'm going to go see if what YouTube looks like as far as the live goes, because I said I wanted to be able to see. I wanted to be able to see when I'm live, so that way I can see the comments, because sometimes I can't see the comments. And even though I'm here, I don't see myself live on YouTube either. Maybe is that on purpose? I don't know. Maybe it's what happens when you have to figure out your own technology. Figure it out for yourself and figure it out on the fly. I got some trade ideas too that I shared. That I shared with us. I'm not sure how to even see that I'm live on YouTube. Oh, it says live right there. That I shared. Hey. That I shared with us. I'm not sure how to even see that I'm live. I can see that I'm live on YouTube. Woohoo. That way I can see the comments when they pop up. All right. Let's go ahead and get started, because I want to be mindful of our time. I got a long way to go. We got a long way to go. And I want to make sure that I cover and I definitely get through the plan for going left. To the left. It doesn't really depend. It has nothing to do with putting your stuff in a box to the left. It has absolutely nothing to do with that for our plan for 2024. And then we'll look at maybe one or two different trades, maybe 2 or 3. I always put the list of trade ideas on my Facebook page. I'm Arlissa Pinkelton, in case you didn't already know that. I'm Educator2Trader. I always put the list of trades for the week or potential trades, trade ideas, trade ideas on my Facebook page and in my community, to make sure that you have some ideas on what you can do. Remember, nothing I talk about is, investment advice. I'm not a financial planner, none of those things. I'm not a professional. I'm just talking, and I'm glad to have y'all here to listen. Hey, Miss Deborah, how you doing? Okay, so let's move. Let's go ahead and share. present. Share screen. I'm going to share. Oh, yeah. I guess I could share screen 1. That way we can see what's up. Wanted to bring this graphic in. This is a picture of 2023. This is a picture of SPX for 2023. Each of these boxes, this is a year chart. We talk about charting in our community. This is a year chart. So this is 2021, 2022, and 2023. Right? Looks almost the same. Talk about something that's been consolidating for about 3 years. Y'all see that? Looks like it's been consolidating for about 3 years. The upper limit, you can look here, I underlined it over here, lets you know that the year opened at 38.53, opened down here at the bottom of this box. And it closed at 47.69 at the top of this box. The high was 47.93. The low was 37.94. And R stands for the range. There was about 1,000-point range between top and the bottom of this candle. But you see how we got a green, a red, and a green. This candle basically is the same as the previous year, except for the previous year in 2022 went down for the year, basically. And then in 2023 went up for the year, up about 1,000 for the year, about 1,000 points for the year. I found that interesting, that this is a yearly candle. This is the 1-year candle, and it showed us that price went up for that year for about 1,000 points all year long. Now, this would be, if you're somebody who, hey, Tamar, if you're somebody who wants to do, a long-term iron condor, that would be a long-term iron condor. Maybe you pick, outside of here, and then let some time pass. And but then, you know what? The theta decay would be way too slow on that trade. It would be way too slow. I wouldn't even be able to watch it. Hey, Saida, Happy New Year. We're definitely coming into the new year in about 7 hours, a little less than 7 hours. We'll be coming into the new year. All right, so this is what SPX did last year. Now, SPX, I think, kind of fooled everybody in that people thought it was going to really have, people were anticipating, okay, let me get back to where I want to go. There we go. People were anticipating that we will have more of a bear market. We're supposed to be in a bear market, even though there's a whole lot of green for a bear market. Doesn't mean that we didn't go up and down, because you did. And the market does just that. It goes up and down. That's what it does. Okay, so that was last year. What we're going to cover today, we've talked already about what happened last year. We're going to cover earnings. We're going to cover the meetings coming up this week. And we're going to talk about a plan for Let's Go Left for 2024. And then we're going to talk about a few trade ideas. I want to do about an hour and 15 minutes. I'm supposed to be going to my daughter's birthday party. So that's going to give me time to go get out this t-shirt and go put on some New Year's Eve clothes to go to my daughter's birthday party. Hey, Lady T, how you doing? All righty. So let's look at what kind of meetings we have coming up this week. Where are you? There we go. What kind of meetings do we have coming up this week? Well, we're back to the new year. Hopefully you got a thought for a plan. I'm going to help you with some thoughts for a plan too, because we want to make sure that we start 2024. We want to start off right. We're going to start off 2024 right. And we're going to keep it that way. We're keeping it in the road, right? And I'm going to definitely give you 4 steps to help us get there. All right. So we're looking at what kind of meetings are coming up this week. Monday, of course, is going to be a bank holiday, which is, tomorrow, New Year's Day. The market will be closed. The banks will be closed. All those good things will be closed. Hopefully you don't have to go to work either. If you do, we pray for you while you work. Yes, because that's the way it goes. 9 to 5s, 8 to 4s, W-2 jobs, whatever they call them, all those things, they're what they are, while they're necessary. I've heard people talk about, utilizing your jobs to finance your life, and then utilize your extra businesses or your extra investments to really create futures for yourself. Use those for investments and use those for putting, use your job to help finance the other things. People are like, well, I just want to leave my job. And I totally get that. I spent a year away from, I think it was a year. Yeah, about a year where I wasn't teaching. And then when I came back to the States, I went back into the college professor classroom, which is a little bit different than the children's classroom. But it has offered me some flexibility to be able to do some things. And it took relieve some of the pressure off of making sure my business always covered all the bases. Now I can use the business to actually grow and do other things with, grow the money in such a way where I'm not consuming all the seed, as they say. Happy New Year to you too, Anand. Welcome to our call. Okay, so that's Monday. Monday's bank holiday, markets closed, yada, yada, off to a great start. Tuesday, we've got manufacturing PMI and construction spending month over month. Both of these are yellow folders. So yellow really means low volatility, no volatility, kind of shouldn't be a lot happening there. Wednesday, though, the FOMC people start talking again. They say, oh, we back from the holidays, back like we left something. FOMC member Barkin will speak at 8:30 on Wednesday morning. ISM manufacturing PMI at 10. JOLTS job openings, those are both red folders. ISM manufacturing prices, orange folder, that's medium volatility. Total vehicle sales is a yellow folder. And FOMC meeting minutes, that's a red folder. Whatever meeting that they had, let's go see what meeting they had that's going to require some minutes. A detailed record of FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. We're seeing that on this coming Wednesday. All right, this coming Wednesday, we're going to see some meeting minutes. There's a red folder on purpose. There's probably going to be volatility. All right, probably going to be some volatility. Let's look at Thursday. Challenger job cuts year over year, ADP non-farm employment change, unemployment claims. Those are all before market opens. 9:45 final services PMI. Those were red folders, by the way, even though they were before the market opened. Natural gas storage, crude oil inventories at 11. All right. Those are these when the market is open. These are all yellow folders. And then on Friday, we've got some red folders to start us up. Average hourly earnings month over month, non-farm employment change, unemployment rate, ISM services, PMI. Those are all red folders. Factory orders month over month, yellow folder. And 1:30, FOMC member Barkin will speak again. Okay, so early in the week, Monday, Tuesday, of course, Monday's markets close. Tuesday, not really anything at this point to really discuss. We get some red folders starting on Wednesday. Of course, that FOMC meeting minutes is a big one. And then Thursday, Friday, we also have some red folders. What you should always do is when you're working on your trading, you're also looking at how does the volatility of the market affect the trading strategies that you use? Okay, how does that affect the trading strategies that you use? And then you respond accordingly. Some people in our community trade every single day. They do 0 DTE, SPX, XSP. They trade every single day. We have a strategy for that, by the way, if that's of interest to you, that we have a whole strategy that runs that. And it's, $27 to see how do we trade every day, generating about 10% returns on those trades. But that requires a whole lot more watching and management. All right. People are very successful at it. They make 10% a day, 50% of their collateral a week. They grow their money quite comfortably. But it can be scary. It can be scary. Okay, because you got to watch it. And if you don't have the bandwidth on a daily basis to watch those trades regularly, then may or may not be the place. The strategy does include waiting till the afternoon and using all your data to determine good strike prices, but it requires, a little bit of finesse. All right. And then there's other strategies that we use where we just trade for the week. We do credit spreads. Our credit spread challenge last week. Oh my goodness. Credit spread challenge went so well last week. Last month. It was more like last month. It wasn't just last week. Credit spread challenge went wonderful last month. And we got a lot of people who really got some new information on how to do. I'm trying to get my microphone to act right. Got information on how to use credit spreads to grow their money every single week without as much stress, without as much hassle. Even the daily trades we do include credit spreads, or you can do weekly credit spreads on different ones. That's usually what I share with y'all when I give trade ideas, right? And then you can do things where that go out and longer in time. There's all kinds of ways to generate resources within the market, all kinds of ways, and we do help you with that if you're interested. That's what we're here for. We're here to help you make money, and we're going to do that in 2024, just like we did in 2023. All right, let's go check out what earnings we got coming up this week. I'm excited about getting to share with you the plan, so I got to stay on track so I can get there. There we go. Here's our earnings for this coming week. Thank you to EPS Whispers on Instagram. They always share this graphic. We surely appreciate it. All right. Earnings for this week is Wednesday is UniFirst. This is before market opens. UniFirst, I think, is the uniform people, right? And then I think this is CM. Simulations Plus and RGP are all Wednesday after market closes. Lamb and Weston, Conagra is Thursday before market open. Simply Good, Radius Recycling, Lindsay. Some of these I can't read because that seems like Walgreens. Oh, that seems like Walgreens Boots. I think that says Walgreens. That's going to be Thursday mornings. Yeah, that is Walgreens. Before the market opens, that's going to be Walgreens Boots. That'll be a good one because they've had a few rides with the changing of the CEO and such. Franklin Covey. I didn't even know Franklin Covey did show this stock. When I was working for GE many, many years ago, we used those Franklin Covey planners. Everybody had a Franklin planner. We would go to class and go learn how to use your planner. We'd go, GE spent a bunch of money getting us all using the Franklin Covey. They were a very good time management system, though I will have to agree with that. But they're having earnings Thursday after market closes. And then Friday, looks like this is somebody brands. I can't see it. It's NGO Dynamics and Greenbrier. STZ. I think that's an STZ is up here. I don't know who they are, but they're having earnings before market opens on Friday. So not too many earnings. These earnings season, of course, will pick up as the weeks progress. It definitely will. They definitely will pick up. All right. So let's go on. I'm going to talk about a plan. Okay. I want you to put together, you make sure you got your thinking cap on and you're kind of listening and you concentrating. But let's talk about let's go left in 2024. Let's go left. And left is an acronym. I'm big about this time of year. I start thinking about how did last year go? What were the things that happened in the previous year? We're still in the year, but how did 2023 go? I got to do a better job of keeping track of stuff that happens every month. Because then when I get to the end of the year, I forget really good stuff that happened in January because it was so long ago. I was it was eons ago. Anyway, I start thinking about the previous year and I start thinking about what's the plan for the year that's up and coming, right? So I'm kind of a planner. So even though I don't plan but a month or so ahead, I'm still a little bit of a planner. I think ahead. And I start thinking about how are we going to have ourselves, hey Jeremiah, how are we going to get ourselves ready for 2024? Because this whole thing is about growing our resources, growing our wealth, growing our resources, increasing our abilities. This whole thing is about that. Is how do we increase our resources? How do we grow our portfolios? That's what this whole thing is about. This whole thing is about that, right? Let's go left. So the first thing is the L. The first thing is the L. Well, before I get there, let me say this real quick before I go there, because I feel like I need to mention mindset. I think mindset is super important, right? Somebody yesterday, I was looking at a Facebook post, and the person was saying that they didn't want to necessarily look at a lot of investing because they were a little concerned that there was all these things going on in the economy, these things going on in the world, and what if they invested and lost their money and da 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 da. And the scripture that came to mind was, those who consider the wind won't sow. Those who consider the wind won't sow, because you'll be so worried about all the things that you won't sow. But there is no way to reap a harvest without sowing. There is no way to grow from an investment without investing something. It just doesn't happen. And if you don't do anything different, there will be nothing different to get, right? You can just look at the ground and look around you and say, there's nothing, it's scary out here. And it is. It is. But you can't reap a harvest if you don't ever put any seed in the ground. I know we have to use wisdom when we're deciding where do we put our money in the ground, or where do we invest our time, energy, resources. Yes, we have to use wisdom with that. But to say I'm not going to do anything because I'm afraid I'm going to lose it, that's definitely a mentality of scarcity and lack, which we don't have that. There is no shortage of money in the world. There's no shortage. And any of you who went without money or lost money, I'm almost guaranteed that you got some more. Whether that you made some more, you found some more, somebody gave you some more, you earned some more, you ended up with more. Yes, some of us have made bad decisions financially, and we can look back and say, well, I wish I had done something different with that. But our mentality has to be that there is an abundance, and that if there was some, then there is some more coming, and we can't not make a move based on the fear that we'll lose it. Okay, because investing, of course, includes there will be some losses. That's why you need to determine what's a good plan for you, which I'm going to talk about that in actually step 2, I think step 2 or step 3 or maybe step 4 of let's go left. All right. That was my mentality. Yeah. Scared money don't make money. This is true. I think wise money makes money. I'm not saying don't use wisdom or just throw caution to the wind. I'm not saying that, but I think you've got to invest something somewhere. Time, energy, money. Yeah, you got to put it somewhere. Okay, so now I'm to my L. Let's go left. Our first L. L is to lean in on 1 to 2 strategies. Now, I purposely said 1 to 2 strategies on purpose. I intentionally said 1 to 2. Why do you think I said 1 to 2 strategies? Why you think I said 1 to 2 strategies? Let me know in the chat why you think I might have said 1 or 2. That I didn't say lean in on some strategies. Why did I say 1 or 2? I'm waiting on y'all. Somebody to put me a little note in the comments. Somebody somewhere put me a note in the comments. Why did I only say 1 to 2 strategies? Consistency, simplicity. Yes, absolutely. Absolutely. Easier to manage. Very good, Patrick. For focus. Absolutely, Tamar D. McIntyre. These are good answers. If you doing this, and this with all the strategies, because that's like what you look like if we got too many strategies going on. Now, jack of all trades, they say, is a master of none. But the rest of the statement, of course, says that you'd rather be able to do a bunch than to do none. I agree with that. What I'm saying is, if we narrow our focus, yes, Ms. Deborah, help us narrow our focus and zero in. If you narrow your focus and zero in on 1 to 2 things, you'll be like an expert at that thing. You'll be able to run it without any problems. 1 to 2. It really would be best if you pick 1, but if you pick 2, because some people want to have a little bit, something else to fall back on. 1 to 2 strategies. Find out which 1 or 2 strategies you want to lean in on and focus your attention and energy. And the reason is because even though we're looking at 1 to 2 strategies, all of us got life happening. Many of us are parents, or we're, sisters and brothers, we're siblings. We may be the caregiver to our own parents or someone else. We've got jobs. We've got other things. We're trying to have a life. Maybe we're trying to date. We're trying to keep our marriage together. All the things, you're trying to lose weight. I mean, there's so many things to focus your attention on. There's so many things to put your attention on. And most of us are not 100% just looking at screens and trading all day long, every day. That's not like our only thing that we do. We do other things too. So if you get 1 to 2 strategies, then you can put a space in your mind that is dedicated to just those 1 or 2 strategies. That's how I'm going. This is my trading life compartment in my mind. Because you got a compartment for keeping your kids together. You got a compartment for, not letting people run you off their job. You've got a compartment for staying in your relationships. These are compartments, and you may be doing other things. You might decide I got real estate and I've got to manage that piece of my business, or I'm a tax preparer, whatever. People got other things going on is what I'm saying. So pick a spot in a small amount and a place you can focus and zero in. Lean in on 1 to 2 strategies. Yes, lean in on 1 to 2 strategies. Okay, so here we go. What trading strategy is perfect for you? If you don't know which one is perfect for you, then you need to run this quiz right here. I wrote this quiz, tradingstrategyforyou.com. HTTP trading strategy. I don't know if you can pick these. I don't know if you can grab these things out of the links out of the comments, but if you can, there you go. Right? If you don't know which strategy fits your life, not just fits your personality, but fits your life. Sometimes your life shifts and a strategy that used to be fine for you in one season of your life doesn't fit right now. Maybe you're a teacher and you're off right now and you can have a little more time to dedicate. But when school starts back up, you're going to need to be able to work a strategy that fits that part of your life. Okay. So if you haven't done that already, look at the perfect strategy for you. For you and your personality, because you also may realize that, I want to make daily money with XSP and SPX on those 0 DTEs, but I'm too scary. I'm personally not an aggressive trader. So if that's the way you function and operate, or if your money mindset is a little more to I really want to hold a little tighter to my money, I'm not as an aggressive of a trader, then that may or may not be the best strategy for you. Yes, you want the returns, but with those returns comes another level of engagement that you may not fit your life. Might not fit your life. I had a young lady who was a doctor, and she worked at a really busy clinic, and she was trying to do the SPX 0 DTE. And some days she did fine at it, but a lot of days she didn't, because she would set a trade and then get about doing the job that she had, very engaged and high level, high functioning job. And then by the end of the day, her money would be gone because she never had a chance to come back and check it. So she was very distracted in her daytime because she's trying to do a job as a doctor, but she's also thinking about her trades. Yeah, so it may not fit your life. And it's okay. Let's find a strategy that does fit your life. Okay. We did L. L was lean in on 1 to 2 strategies. 1 to 2. Please help yourself. I'm trying to help you. Help yourself. I'm trying to help you help yourself. If you're anything like me, you believe you can do a lot of different things at once. And yes, we can. But a lot of times that distracted energy, nothing turns out really well. Letter E, educate yourself. Educate yourself or get some education, one or the other. It's really a mixture, because even if you get some training courses, you're still going to have to take time and engage with that content. You buy a course of mine, right? You buy a course of mine, you got to watch the videos, you've got to go through the steps, you've got to spend time in your sim, you've got to use your on demand in Thinkorswim. I mean, you've got to engage the content. So when they say educate yourself, even if you go purchase, which you're going to need to purchase something, you're going to purchase some trainings, right, that go along with that. And then you got to engage with it. Every strategy I talk about is found at Educator2Trader.com. If you're a newbie, we've got options 411. For people who don't know nothing about options, want to get started, we've got options 411. If you are, you know some stuff, but you want to maybe learn some strategies, you figure out what strategy suits you, and now you're ready to learn it, then you need to purchase this training that goes with that strategy. Cash secure puts, covered calls. That's kind of one, the wheel strategy. We've got covered calls. Actually, cash secure puts and covered calls go together, right? That's the wheel. We've got put credit spreads, call credit spreads. You want to be a person who shorts. All these things. We got all these trainings. All these. Go over there to Educator2Trader.com. Check out what's available. Grab what is there for you. Join up with the community, because education works out better if you kind of working with somebody, right? And grab hold to some education. Okay, number 1 was lean into 1 or 2 strategies. Number 2, educate yourself. Get some education. Lean all the way in on it. The F, focus on fundamentals. Focus on the fundamentals, right? I'm going to talk a little bit about this one for a while. I sent an email out yesterday. Those of you who are on my email list probably saw it. Hopefully you read it. Hopefully, did y'all read it? I hope y'all read my email. Don't be letting me send emails and y'all just blow by. Anyway, in the email, I talked about how, it was maybe 2 days ago, I wrote this one, that I used to not chart. I learned how to chart at the beginning of my learning journey. I did learn how to do fundamentals. But once I started leaning into strategies, I really stopped utilizing those fundamentals to the same degree. And I was doing all right with my trading and with my resources, but not like I wanted to be, not like I could have been. And it was when we swung back around to it, we swung back around to charting when I started teaching options 411, because I realized I couldn't get to teaching strategies if the person didn't know support and resistance. That had to be a part of it. So I had to put that into the training part. And as I started looking at that closer, I was like, it's like a light went off, which is crazy. Light went off in the coach's mind that said, we might need we might need charting. We might need the fundamentals. We definitely need the fundamentals, right? So now, starting on January the 6th, I am going to be offering a Chart Your Way to 100K 4-week boot camp. Chart Your Way to 100K. Let me fix that in that link, because that's not a TP. That's to Chart Your Way to 100K, right? I'm gonna put this in the link. Now, this is for anybody who is new. If you're brand new and don't know about fundamentals, this is for you. If you've been trading for a little while and you know that you don't really lean into technical analysis the way you should, this is for you too. If you've been trading and your profits have not been what you want them to be, you might need to sign up too, right? We're going to cover indicators. We're going to cover charting basics. We're going to cover support and resistance. We're going to cover candlesticks. We're going to cover all the stuff. 4 weeks. We're going to go 4 weeks of making sure that you got everything you need to increase your profits this year, right? Technical analysis through chart reading. That's what we're doing starting on January the 6th. I put the link there, chartyourway to100k.com. You can go and sign up for that. We're going to do it every Saturday of the month of January. And we're going to increase. The more we know, the more you learn, the more you earn, as they say, right? The more you know about your technical analysis, you're going to feel more confident. I find that a lot, that we have people who sometimes take trades because somebody else said they should. I'm guilty. I've done it in the past where somebody was like, oh, so-and-so's running. And then you go look, you're like, oh, it is going up. And what you didn't look at, because you didn't look at the chart, is that it's going to run right into a resistance and it's stopping. By the time you jump into the trade, the run is over. Train ride is pulling into the station. You done jumped on a train that's coming to a halt. But it was running. Yes. And if you had been looking at chart reading, or if you had known what you were looking at, you would have gotten in on the early part of the run. I mean, you would have gotten a lot more out of those profits. This is for whether you're a seller or a buyer, because chart reading works no matter what strategy that you're using. This is for every single strategy. You need to understand how to technically analyze a trade based on those charts. Period. How do you utilize this information to help you make informed decisions? All right. Chart your way to 100K 4-week boot camp. All right. Okay. So our L, lean in on 1 to 2 strategies. Our E, educate yourself. Our F, focus on the fundamentals. Fundamentals. And our T is trade with a plan. If you've got a trading plan, I want you to put yes in the chat. And if you do not have a trading plan, no shame. I'm not nobody's. No shame. Put no in the chat. Put no in the comments. If you don't have a trading plan, put no. Or if it's an old one and it's not updated, or you got one and you don't follow it. Some people, I used to have a trading plan. I didn't necessarily follow it. I had it, didn't use it. It don't do no good. D. McIntyre says, yes, she has a plan. Andrew Cat, it says, I'm working on a plan. Yay. Adrian says, sort of. Jermaine says, nope. Patrick says, nope. Nope. You got to have a trading plan. And our trading plan is one that is strategy specific. The trading plan is strategy specific. I'm going to go grab this so I can put it into the chat. This is a video that you can watch. All right, it's a video you can watch on how to do. Miss Deborah said sort of. Yes. Now, trading plans are different for different strategies, right? You can have a general trading plan. I will enter on the days when I can focus. I won't trade on the days when I'm distracted. I will trade a certain percentage or a certain dollar amount of I won't, over leverage, and I'll watch my risk management. That's a general one. A specific one says, if I'm trading credit spreads, for example, because we love some credit spreads around here. Credit spreads is our thing. Says, okay, I'm going to use $500. I'm going to enter these trades when price is coming towards my support or resistance. I will get at least 10% returns. I will exit these trades. This is a specific thing for credit spreads. You'd write a specific one, or those, it don't have to be nothing deep. You don't have to write no whole book. You can just a page that lets you, a guide. It's really a guide. What you use a trading plan for is, it is something you put together when you are calm and not under stress, that you can use in the situation when you are under stress. Did that make sense? You create a plan when you're not under pressure, so that when you get under pressure, you got something to drop back to and say, my trading plan says I will close my trade if I'm at a 2x loss. I will, my stop loss will be at blankety blank spot amount of money or certain percentage. I won't enter trades on this day or this time of day. These are the things that a trading plan, those are things that you put together when you're not under pressure, so that when you're in the midst of a trade and the price is bearing down on your trade, it's not going your way, and you need to decide to turn it off, or you're getting ready to enter a trade, but you haven't followed the steps that went with that trade. This where your trading plan comes in. All right. And you write, again, something simple that's for you to use and follow. It doesn't have to be anything deep or in depth. It's not a whole chore, but it's something you really have to have. You have to have a plan. All right. We have to have a plan that we will follow. All righty. We're going left in 2024. I'm going to share my screen again. We're going left in 2024. Let's bring our graphic here. Let's go left. Where are we? Is it filling up the screen? Doesn't look like it. Let me say fill all the way up. Come on. Allow. There we go. The control is right behind the camera. That's what that's all about. Okay. Lean in on one or two strategies. Educate yourself. Focus on the fundamentals and trade with the plan. If you follow these 4 steps, I'm willing to put money on it. I'm not a betting person. I'm not a betting woman. Even though sometimes trading kind of feels gambly, I'm not a gambler. But I promise you, if you lean in on these 4 steps in 2024, you're going to have a record year financially. No cap, as my grandson says, no cap. Lean in on, you pick 1 to 2 strategies and master those. You educate yourself on those strategies and on the market in general or particular stock you're looking at. Focus on the fundamentals, focus on charting, chart reading, focus on some particular indicators, not too many. We'll talk about that when we get to chart your way to 100K, that some people got so many indicators on their chart they can't make a decision, or they're making conflicting decisions because there's too many things are on the chart. And then we're going to trade with a plan. We're going to trade with a plan. And I promise you, I promise you, we can come back in December. And if you say you did these 3, you can try it for a month. You don't have to do all year. Try it for a month. Lean in on one strategy, get the education, focus on the fundamentals for that strategy, and trade with the plan. I promise you, in 1 month, you'll be able to tell the difference in your trading. You know how I know this? You know how I know? Anybody want to guess how I know? Because I did it. Once I quit doing all the things, once I focused on just education in a certain area, once I really leaned back in on the fundamentals that I had previously learned, once I wrote and kept up with the plan, I've always had a trading plan, just didn't always follow it. But once I leaned in on a trading plan and use it all the time, my gains got to be a whole lot more consistent and dependable. And that's what we're after here. We're trying to get dependable, consistent returns. If, for example, you need or you want an extra $100 a month, or you want an extra 200 or 300 or 400 or 5, I mean, what the number really is up to you. If you know you want that extra money per month, there's a way to get to consistent returns. But it really will take focus. It will take a plan, like anything else. You decide you want to get rid of debt, you got to get a plan. You decide you want to increase your stock market profits, you got to get and use a plan. I'm here to help. Okay. I'm totally here to help. Me and the community that we've cultivated, I'm definitely here to help. If you haven't subscribed to the channel yet, please go ahead and subscribe to the channel. You can follow me on all the places in the internets. I'm in all the social media places. You can follow me there. If you need to send me an email, you're free to do so. Arlissa at Educator2Trader. I'm not done yet, but I'm just kind of hitting these things before I make transition. All righty. Coolie high, coolie high, coolie high. All righty. Let's go look at us some trade ideas. Let's see if we've got us some trade ideas we can look at for today. Now, I told y'all we into the credit spreads. So this is our graphic. This is our graphic for this week. Credit spreads. Not too many on the call credit spread list. I went looking around, and the things that showed up on the call credit spread list were things that were strong buys. And if it's a strong buy, that means the process is probably going up. But I have found that I didn't put Google on this list, but I found that there's sometimes like Amazon and Google, they during the week are going up, but by the time you get to Wednesday or Thursday, they kind of are at a place where they're leveled off, and you can get a call credit spread on those maybe on Wednesday afternoon or on Thursday that will expire that same week and still get reasonable premiums, right? The whole plan is we want to definitely get 10% premiums off of our credit spreads. We don't only do credit spreads. We also do cash secure puts and covered calls. But over the last month, we've been working credit spreads. So I'm still leaning in here because I really feel like there's a lot of possibility and opportunity there to operate as sellers. I'm a seller coach. I coach option sellers, right? I know how to buy options. It's just I did it. I didn't like it as much. And probably because I didn't make as much money. I didn't feel as confident. I had to do a lot more watching. It just required more of me than I was able to do. So selling seemed to just suit my lane. It ain't for everybody. But I would ask that you not knock it till you tried it. Don't knock it till you tried it. All right. We've got about 15, 20 minutes. Let's look at some stuff on here. I got some I picked. Anybody see any? If you see something on this list that you really like, mention it. I have a few I've got listed. I think I've got XOM, Carvana I'm going to look at, and I'm going to look at one of these XLs. I did more XLs on this list because I wanted to start to look at the sector ETFs. What I've not seen so far is some of them don't really offer great premiums. So I put them on the list for us to begin to look at them, but it may not be, they may or may not be something that you may want to trade, because I really want you to try all the time when you're doing credit spreads to get at least 10% returns on your money each week. All right. Anybody else see anything that they want us to add to the list? I was tempted to add Mara. Some of these over here. Most of these in the put credit spread area. Almost all these top 5 here are all crypto related. They're all crypto based stocks. And we do know that is a boom right now. That crypto ETF is supposed to have a meeting on the 10th of January, I believe, to decide whether the crypto ETF gets approved. And if it does, that's going to be some stuff, right? I'm not one who, pushes or talks. I won't say pushes crypto, but I'm not going to miss the opportunity either. I feel like this opportunity is going to be one that we're going to could potentially benefit nicely from. And if some of us were told all kinds of things about not jumping on crypto. It's not real. It's too risky. It's this, that, and the third. But I really believe it's coming. And if we can get some benefits out of it, then we should, right? We don't want to miss another boat. Okay, we can't afford to miss. This may be one of the last boats we get to ride on to wealth. So, you don't want to miss out. I'm not saying anybody should go and put all your life savings in. I'm not saying that, but I'm saying, do some reading, do some, investigating, get some education or whatever. And then, again, sow a little seed. You can't pull up a harvest if there's no seed in the ground. Can't pull a harvest if there's no seed. All right, let's look at XOM. This is where we're going to start. We'll start with XOM. We're on the daily chart. Again, we always start with the chart. If you want to check out the free webinar, there is a free webinar I have going called Start with the Chart. Start with the chart. I'm going to say .com because our buddies are still tripping about these links. Startwiththechart.com. You can see that's a free webinar about charting and such to go along with it. Okay, so we're looking at XOM as a call credit spread. Call credit spread. We see here there's been we got a little bit of, honestly, it's been kind of consolidating in this zone for a minute, and that may be of benefit to us. We'll see. But let's look at what do we put on some lines here, some support and resistance lines. We're looking for resistance when we're doing call credit spreads. So I see 102. Now, what I also see is several gaps. There's some gaps that are on the way up here. Gaps do provide some resistance, right? So keep that in mind as you're going. Current price closed at 99.98. There's a gap below here, which is actually what stopped. It seems like it may be what stopped it under here. So it may bounce off of this, but sometimes the bottom of a buyer's gap, because there's buyers hiding in here, right? There's buyers. There were people who were set to buy at these prices between 98.94 and 99.85 between this dollar. There might have been buying orders that were sitting in the queue and they got skipped over because of this gap up back on December 14th. So if this price comes in, which you saw it did, comes in here, may pick up some buyers and the price goes back up, which is why it closed higher than that gap. But if it gets in here, sometimes it'll kind of go up and down, up and down, up and down. So the gap could provide also some support for a put credit spread. There's also some support down here. We're not looking at put credit spreads right now, but we can look at both. Honestly, I put it on the call credit spread side, but it really could go, it could go either way. We can do a put credit spread or a call credit spread, and let's look at both. Okay. So we've got resistance at the top of this gap, 101.65 or 102.76. We'll look up here, maybe the 102 range to see there. And we can also look below maybe $98 and see what's under here, 102 or 98. Now I flip back over to the option chain and I'm looking out just for 1 week, right? We're looking at probability out of the money on the put. Well, let's start with the call credit spread side. That's what we're looking at. Probability out of the money, 76% is at 102, which is what we mentioned on the chart. 102 was also the place. 76% probability out of the money basically says there's a 76% chance that this strike will be out of the money at expiration. 76%, 76.91. That's fine with me. Some people sometimes want a little bit more. If you want to go to the next strike up, that's fine. It's an 86% probability being out of the money. And when you're a seller, you want to be out of the money. When you're a seller, you want to be out of the money. So you want to know, you want your strike to be out of the money. Okay. So we can look at 102 or 103. I'm going to switch over to vertical so we can see what the money looks like. At 102, 103, at this particular strike price, we can collect $17 for a one spread. That's a 17% return, $17 while you leverage $100 of collateral. One spread is $100 of collateral, 1 times 100 shares. That's a 17% return. Not a bad trade for a week worth of 1 week worth of leveraging your collateral. If you want to go to a little bit safer, 103, 104, that's paying about $8 in returns. That's not quite 10%. And then you know you're going to spend at least $1, maybe $1.50 on fees. So you do want to keep that in mind, depending on what broker you're using. If you're using Robinhood, the fees are like pennies. But if you're using Thinkorswim and some of these other guys, they charge, I think I pay 50 cents per leg. Some people pay 65. It depends on what broker you're using. Okay. For me, I like the 102, 103 there. So I'm not sure if that's what I put on the 102/103 call credit spread. That paid $17. Of course, when the market opens, things change. So all the things that we're talking about price-wise, you're going to wait to see when the market is open to confirm the prices. On the put credit spread side, if we're looking for probability out of the money of over 75, which would be 98, which is the same place we looked at on the chart. When we looked on the chart, we also said 98. So 97, 98, turning it to vertical, 97, 98 is paying $17 as well. 97, 98, 97/98. Put credit spread is also paying $17. Why is this a good thing? Well, if we can do an iron condor is going to take in, you're going to take in the money of both sides. Okay, receives, you take in the money for $100 of collateral. Okay, you take in the money for both sides, but you only use one spread for the collateral. Right? So the broker doesn't charge you the collateral for the put credit spread and the collateral for the call credit spread. They only charge you for one side because the broker also realizes that price can't be in two areas at expiration. It can't be at 102 and be at 98. It can't be at both places. All right. So if you looked at either one of these sides is fine on its own. You're going to want to determine which one you like, as far as trades go. Exxon has been in between 98 and 102 for all these days, right? 2, 4, 6, 8, 10, 11, 12 days, except for this one. This is the only one that really bumped out. It's been in that window of time, in that window of price for several days. Not saying it can't go out, because it does. That price does. It does that, right? But, I mean, 98 actually down here, it's been in between that zone for longer days, because this is 98 down here. Maybe a good oil. XOM is, of course, Exxon, and that's in the oil space. And it's kind of just been, sitting and doing its thing. XOM, that was not trading advice, just us looking at technical analysis for a stock. Okay, let's look at Carvana next. Looking at Carvana. I have a few things on the chart already because we've traded Carvana for the past several weeks. Carvana has come through like a champ. It's got good premiums, right? It's a good, reasonably priced stock. It's worked out good for us. Excuse me. I have been fighting this cold. Now that I started coughing, it's not going to want to stop. We're going to curse that in Jesus' name. Yes, we are. Yes, we are. Hold on, y'all. It's like you cough one time and the rest of it just wants to be tickled. There's a tickle. But I have my cough drop ready. Ricola. I had Ricola ready for just in case. I'm glad I did, because now it's trying to trip, but we're going to be all right. We going to be all right. We going to be all right. Yep. Okay. Carvana is on the call credit spread list. Sorry, it's on the put credit spread list. So if we're looking at support, we're in this area right here. This is where I would see some support. There's a pause back on December 15th. You could also look and see there's, maybe a call credit spread just above here as well, because it's another one could possibly be an iron condor, right? I'm trying not to cough in y'all's ears. Okay, so below 50, above 55. Let's go look here. We didn't talk about the plus minus 4.5 on that last one. I meant to mention the plus minus number over here. And that matters too. But what do we say? Between 50 and 55. Okay, on the put credit spread side. 50 is at 69.8. That may be a little closer than we want to be. Maybe let's go to 49.5 or 49. The current price is at 52.94 or like 53. Let's look at 49 or 49.5. Okay, 49. I'm going to turn it to a one spread. Oh, goodness, I didn't mean to send that. I'm trying to see. I don't got hot, too. Maybe that matters. Oh, go away. Nope, I don't want you. There we go. 49, 49, 48, 49. Sorry, let's change this to 48, 49. It's paying $23 for, that's $5, $4 away. $4 away to go down to 48, 49. Carvana. Sorry, y'all. 48.49 put credit spread is showing $23 of payment, right? As far as premiums go, that's a 23% return. And let's look up on the call credit spread side above 55. We want to go higher than the 65% out of the money, maybe up to 56 or 57. Okay, let's look at 57, 58. You'd rather be safe than sorry. 57, 58 is paying $20. Okay, 57, 58, call credit spread. Oh, come on, what are you doing? Call credit spread is paying $20. This is a total of $43 for an iron condor. Now, I'm not one, I don't really put on my iron condors all at one time. There's some people who do, right? I don't put them on all at once. If the price is rising, I'll look at the call credit spread because you get better premiums when price is coming towards the strike price you have. You don't want it at the strike price, but if it's coming, like it's moving in that direction. And then if price is falling some, that's when you get better premiums on your put credit spreads. Okay, so $43 for an iron condor, you're going to leverage $100 and collect 43. A 43% return. Even if you open and close that with your fees, you let's say you keep 40 or keep 30 something dollars, that's still a 30 something % return. That's not bad. Carvana has paid comfortably. Listen, every day once the market opens, though, you need to check when the market is open. Those who've been with me in the credit spread challenge definitely know how to work this. But you wait till the first 30 minutes or so has chilled out. You don't hop on there in the middle of all the volatility. You don't do that. You wait, let stuff settle down a little bit, see what's going on, and then you make a determination on what you're going to do next. Okay? Thank you, Lady T. Last one. XLK. XLK. Okay, come on here. XLK. Technology sector. Let's look at our chart first. Okay, you see this has been, technology's been going up, which is why it's on the put credit spread list, because the trend, we trade with the trend initially. And if we trade opposite the trend, it's when you only got a little bit of time left in that trade. So we would do a put credit spread first, right? And then switch over to the other side after we see that it's cool. Now, we do see here that there was a turnaround here that happened on the 28th, which was what, Thursday? There was a turnaround that happened on Thursday. So a call credit spread may be something that's doable. But what I don't see at this point, let's see if we can get some, we need to find some resistance up here. I don't see nuns. Okay, this 3 years. In 3 years, it's not been up this high. That's saying something. Well, come on. There we go. Sorry, y'all, for running it past your eyes so fast. You can go above this 193. Find you a number up there, maybe up to 194, 95. See what's up with XLK. But let's look at what's below here. Support would be in the area of 192.17, but I probably would want to go on down to this big boy down here. I got too many of those right there. Now I can't see the number. Come on. There we go. 189.67. So that's a couple dollars down. 189.60. Let's go see what the prices look like as far as picking some strikes. Looking at probability out of the money, the plus minus number 2.6, right? XLK looks like it's at an all-time high. I agree with that. And when you're at an all-time high, you got to be careful if it bounces back at you, right? You want to be careful with that. But the other piece to that all-time high is there is nothing stopping it. So it could keep going, or it could hit, people could decide they get to where they want it to be and they sell off because they're like, oh, we had an all-time high. I'm selling off. So this the all-time high territory can get to be a little tenuous because it could hit nothing and return, or it can keep going, right? Nothing's up there to stop it. So let's look here. If we're looking at our probability out of the money, maybe we give ourselves a little room. 190 gives us a 75%. That's a 2 and some change. That's about the -2. So that we went to maybe 189, gave ourselves one more drop, 189. And if we went up to up 2.6, we also will be at what, 195. So we go up to maybe 195. That's a 79% probability out of the money. So we got 195 and 189, I said. 195, paying $21. Seasonality may make it sell off. Oh yeah, did that some seasonality show up for January for XLK? Is it show it is as a down month? The seasonality for XLK show it as a down month, Tanya? 195, 196. Call credit spread is paying $21. Yes, okay. Then that's something you want to definitely keep in mind. Okay. So we've got, I'm just looking at both sides of the numbers so you can see which, because when you got to wait till market opens to check and see if this works for you anyway. 188, 188, 189 is only paying $3. We're not interested in $3. Not for $100 of collateral. 190 puts us at a little bit closer. That's paying 22. That's weird that that's 3 and this is 22, but 189, 190, put credit spread, paying $22. Iron Condor, if you went both sides, but you don't have to. But I want you to see that Iron Condors do provide an opportunity. Okay? Iron Condors provide opportunity. Okay? I looked at, there's several others on the list, right? You all saw that there's lots of other things on our list that we can take a check at. I didn't put Amazon on the list this week, even though it did pop up. Amazon, Meta popped up. The put credit spread list got to be so long. We had Amazon, we had Meta, you got Nvidia. We've had Nvidia on there a few weeks. Google was there. You got Upstart here. So there's lots of opportunity for credit spreads this coming week. All right. Always wait till the market gets open on the day that it opens. Give it a minute, because what you'll see early in the morning is all the people who put in orders over the weekend. All those got to be filled first. So all that extra volatility, that's what's happening in the morning, because everybody's orders are coming in and it's just processing orders. Boom, 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 boom. You want to give that a chance to settle down, and then you go in there and check and figure out what it is you want to do. Okay, see what it is you want to do after that. All right, let's talk a little bit. In our community, we have, a full schedule going. I'm not sure if y'all can see the calendar. We have a full calendar of stuff going in the E2T community, right? All these times are in Eastern Standard Times, but every morning we do a morning call at 9:30. We do it when the market opens. We used to do it in pre-market. We moved it to 9:30. Okay, we do that every single morning that the market is open. So this actually will not happen on the 1st, because the market won't be open. We do it on the days the market is open, right? On Wednesdays, I do 2:00 live on YouTube. That's available for anybody who hangs out at YouTube or whatever. And then at 7 at night, I do a weekly training call with those who are members, the members only. And then, oh, by the way, the morning calls are with members only. Those for people who are members of or the E2T membership. And then on the first Saturday of the month, I usually do a coaching call with our members. But of course, the month of January, we're going to be doing the Chart Your Way to 100K boot camp. Of course, that's going to be for those who are signed up for the boot camp. On Sundays, we go live at 5, which is what we're doing right now. What I'm going to do the first week of January, starting this week, I'm going to go live in YouTube, just like I am right now. I'm going to leave it open for the world to come and hang out with us at our morning call. I'm going to leave it open to the world because I would like to see about bringing more and more people into the membership. I want to have more people who are here and able to be with us on a daily basis because there's just stuff that happens every day. I've had too many people who were kind of on the fringes of our membership, and in the morning call, we would have talked about how there was a meeting coming up at 2:00 in the afternoon that was going to cause volatility. And I've had people who were just on the fringes of the community not hear that because they weren't in the morning call. And then they end up taking a trade and their trade goes bad. That if they had known that they were going to, there's a meeting coming up, they wouldn't have taken that trade. Okay. Just sometimes being in proximity, or sometimes you're in a trade and you need, somebody just to guide you through it. Then maybe you get stuck and you want somebody to help you close, or should I close now? What should I do? That community matters. All right. And this is not just for me to just grow an entity or community unto myself, but I'm saying I do know that the educator trader community is a place where people want to be. All right. Because it's a very open and warm community of people who help. We're not there to there is no big eyes and little U's. We're there to try to help everybody that we can, make sure that we can get all we can get out this market. All right. Truly here to help. All righty. So this is what calendar we got going on. This is what we do on a monthly basis. This is the services. This is the things that E2T provides. And I really would like for you to consider, I'd like for you to consider joining up with the Educator to Trader community. I'd like for you to consider hanging out with us and being a part of our membership. Alrighty, in 2024. Let's get this money. We're going to stay green, which is that our motto. We stay green and we get this money. But listen, time is winding up. We do not have time to be just figuring stuff out on our own. We need to follow somebody who know where we're going. And yes, nobody's saying you take away your own brain power or that you don't utilize your own, because you're going to need to. I'm one who teaches people to fish. I'm not one who's going to feed you to fish. I don't hand off fish. I teach you to fish. But because we've been through around some pitfalls, I can help you avoid some stuff that you may not know you getting ready to run into a pitfall. I can help you avoid those. All righty. So if you'd like to hang out with us, do consider. Tanya says, great community. Thank you, Tanya. Do consider hanging out with us in the new year. The membership is $97 a month. We spend time together several days a week. We have an exclusive Telegram where I'm there helping to answer questions and to help provide and guide people along the way. It's a very engaging community, and I would like for you to join us if you consider that in the new year. I promise you, you will be glad you did. All right. Miss Deborah says, awesome community. Thank you, Miss Deborah. All righty, you all, I'm going to wrap up so I can go ahead and get dressed to go to my daughter's birthday party. And she turned 27. My youngest is 27. She turned 27 a couple days ago. And the 27th. She turned 27 on the 27th. But she decided to have her birthday party today. So we're going to go and celebrate. Celebrate, Gabrielle. Come on. That's what we're going to do. Okay. All righty, you all. Please look for me, not tomorrow because the market is closed tomorrow, but we will go live on Facebook and on YouTube on Tuesday morning at 9:30. Okay, we will go live. We will hang out together, give you an opportunity to join us in our morning call. See what that really is all about before you decide you're ready to jump on in. Okay, we want to do two things in this community all the time. Two things. Poop, 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 poop. We want to stay green. Thank y'all for saying happy birthday to Gabby. We want to stay green and we want to get this money. All right, everybody. I want to bid you a fond farewell. Everybody have a really good, happy new year. Be safe. If you're going out this evening, be safe. If you're not, enjoy yourself inside. my church isn't having church tonight. Our church is not doing it, but some people are going to church. Enjoy your church services if you're going to go to church, for sure, and ring in the new year safely, and have a happy new year tomorrow. Enjoy whatever foods you eat. If you eat the traditionals, enjoy those, or whatever it is you're going to do. Enjoy your day. One more day off, and then we start up and running on Tuesday. All right. Happy New Year, everyone. Thank y'all so much for hanging out with me and for E2T. I really do appreciate that you spend your time with me. Believe me, I really do appreciate it. All righty. I'll see you on the chat. Find me across social media. Send me an email if you want to. All right. Talk later. Bye, everyone.